Hey everyone, this is John Feneck with the Feneck Commodities Report, and with me today is my YouTube partner, Don Durrett, founder of goldstockdata.com. Hey Don, how are you today?
Hey, John, real good. Time for another
Good.
interview.
Yes, today we've got James Longshore, who is joining us from Xtra-Gold. He is the CEO and co-founder, the ticker in Canada, XTG, the ticker in the US, XTGRF. James, welcome.
Hey, thanks for having me.
No problem. Would you be kind enough, James, to give us maybe 7 to 10 minutes on the company and what the prospects look like going forward for you?
Sure. Well, it's a long history, but I staked the ground in 2003 when gold was 275 an ounce. So I staked it as just saying in my lifetime, I thought gold would have some value. At that time, obviously, it wasn't economic to bring it out of the ground. So we were very fortunate because we tied up the Kibi Gold Belt, which was known as the richest sources of alluvial gold in all of West Africa at the time. And Newmont, I beat them to the staking by about 3 months. They just acquired the Normandy assets, and it was a 500,000 gold shoot, and they ended up drilling that out to about 10 million ounces. So we're in a big area. We're next to the prolific Ashanti Gold Belt, and finally, in late 2010, we just inventoried the company in a private company, Shell. We went public on the Toronto Stock Exchange, and we did our first gold shoot drilling. Put about 200 drill holes in the first gold shoot, spacing over about 1 kilometer. Came up with some nice intercepts, not a resource yet, but very interesting. And then the gold market fell apart about mid 2012. But we had a lot of majors interested in the asset, had a few offers to buy the land package at nice valuations. But obviously, we were looking to prove up, a significant amount of ounces. So we just buttoned down the hatches for the bear market. And then in 2020, we went back to drilling quietly. Because we had that alluvial gold, we partnered with some local alluvial miners, all African, and we did a revenue sharing. So we generate about 4 to 5 million of free cash flow a year at these gold prices. So we were able to do all our drilling. We have 3 drill rigs, the company owned, which makes us unique. That's important in our industry because, as you guys know, juniors explorers have to constantly finance and raise capital. Well, we developed a cash flow model. So the cost of drill meter contracting in Ghana is $250 per meter USD. And we're doing it for under 50 per meter. So we've reduced our cost by 80%. So that's important that we self-finance. We haven't done any secondary offerings since the IPO. The IPO was done at $1.35 per share, and we're only back to just slightly above that price, about $1.50. So it's a unique company. We put up a resource at the end of 2022 in October. That first gold shoot is just over 1.2 million ounces, grading 1.2 grams at surface. That's very economic. Average big miner there is extracting gold at about a 1 gram at surface open pit. So we have 3 of the top majors, Newmont next to us, and then Anglo Ashanti and Goldfields that are all public. And recently, Newmont sold the mine next to us to Xinjiang for the Chinese biggest producer, $1 billion cash. The resource left over, I told you it was a 10 million ounce deposit. Now it's 2.8 million ounce resource left. So they paid a nice premium for it. So they're next door to us. So our plan right now is to get this resource. We've identified 8 other gold shoots next to the resource from surface soil sampling, trenching. We're going to drill those up. We're in the third shoot. Our immediate goal in the immediate term is to get this thing over 2 million ounces. And any major miner, if the resource is open-ended, would be interested in this asset. So that's our goal as explorers, but we do have the cash flow being generated, so we don't need financing. We own our own rigs. So we've kind of done it the old-fashioned way, like I guess the old miners used to do: mine it and then find it.
Thank you. Hey, Don, do you want to start?
Yeah, I got real simple questions.
Sure.
So, you have 50% insiders with family and friends and founders. So
Yeah.
basically, you guys own the mine. I mean, no one's going to steal it. So you can sell this at whatever price you want. How much, I mean, how patient are you guys going to be, and how much gold do you think you're going to find? I mean, I know this is a difficult question to answer, very difficult. So, because what I'm basically doing is trying to get an idea of what you think the size of this thing's going to be. I mean, you're self-funded. You can be as patient as you want to be. You can sit there and you got 55,000 acres. You can just sit there and drill for the next 3 years and get this thing to. My question is, what is your minimum size? I mean, 1.2 is definitely not your minimum. It's higher, right? So is your minimum 2.5, 3 million? Do you have a kind of a solid, but for me, I'll give you an example. Like this, my website, Gold Stock Data. I have an exit point. Somebody offers me a certain dollar value for my website, it's theirs. So I have a number, right? You probably have a number too. And so I'm thinking, okay, you're looking at, I mean, you guys own this thing. You don't have to, you can sell it for whatever number you want. It's going to get bigger. You're self-funded. You're getting 4 to 5 million in free cash flow. That is a lot of cash to drill with. You can pop a lot of holes in there. You're probably only drilling down to 100 meters. You can pump a lot of holes in the ground. And so, I mean, you want to probably get this to at least 2 million, maybe 3, and then you want to sell it for more than $100 an ounce is my guess. So let's just, I mean, are you guys throwing these numbers around and thinking about your exit strategy? Is that part of your mindset?
Yeah. So look, we're very patient. Me and the co-founder, we've been very patient. We staked this and held on to it as a private company for 10 years, right? And then we drilled it, and then IAMGOLD offered to buy it from us, and they were a little slow in the sale of the board in 2012 because IAMGOLD loved the asset. But we didn't have a resource yet. They were looking at it as a land package. And then we had to button down the hatches for another 7 years. So if 17 years of not drilling isn't patient, I don't know what is. So now we're in a huge gold market. We bought the asset because we believe gold would have, we're not gold bugs, but we believe that deficit levels were too high and all that stuff. So now we're in these deficit levels we don't even really understand as human beings. So, we're still young enough to monetize the asset for our shareholders. So the question's a good one. So I'll just tell you what Newmont said when they were there. They said, we just buy that Kibi Gold Project when you hit 2 million ounces and the grades were economic, because we backfill our plant that was 50 kilometers away, and they had mapped a conceptual haul road. So that's what Newmont said, but Newmont has sold now to Xinjiang. The deal closed about 3 months ago. So the Chinese are even more aggressive. So our strategy is to get it to 2 million. That's my internal strategy. And then see if we want to partner. That if it's open-ended to go to 4 or 5, I think there's 4 or 5 million ounces there on the Kibi Gold Project. There's always a chance if you hit a main vein deeper. We haven't looked at the underground yet. You could have a world-class deposit. There's a chance at 10 on the upside. But that's not, you're given what Mother Nature gives you. So in the short term, take it to 2 million ounces. That's one of our 5 properties. That property is about 40 kilometers squared. Remember, we still have 4 other mining leases we haven't drilled yet. So there's a chance each one could have a deposit. So I think in this one, we want to get it to minimum 2.5 million, show it's open-ended, and in this gold cycle, return to our shareholders and then go to work on the other 4 properties. And I will say this, that they're all unique properties because they're all permitted to mine. And, just say what Newman said, they love that because it's shovel ready. As fast as you can build the plant is the time frame to get these things in production. So we don't have the permitting risk like in North America, where it can take 10 years to get a permit to mine something from exploration. So that's expensive. So right now, gold in the ground in Ghana per ounce is going for about 150 per ounce in the ground at today's gold prices, roughly. So, because if you're shovel ready, and if gold stays here, I think that will creep up. Because so we get premiums above Canada because of that, because they're permitted to mine. Yeah. And we get USD dollars, right? So hopefully that answers your question on that one.
Yeah, it does. So my thesis is that the project generator model doesn't work And nobody is pivoting into a model that does work. In other words, your model, if you just follow the same model that people are using, you basically drill this out and you sell it. And I don't like that model at all. It just doesn't. Or you sell it and you spin out the rest of your properties and move on. I don't like that model. But what I would like to see is that, which is I think you guys could do, which would really benefit shareholders, is you basically drill out a property like this, 2 million ounces, and you de-risk it, and get it shovel ready, and then find a partner to basically build it and operate it, and keep 50% of the free cash flow, and then move on to your next property. So you have this one, and basically it's kind of a rinse and repeat strategy. And it's a rinse and repeat where all you're doing is building the company, making it bigger and bigger and bigger and bigger, just adding free cash flow. So once you do it once, then it's easy, because from that point forward, it's all organic, because you're going to generate all this free cash flow that you use to drill the next one and develop the next one. So you don't have to dilute the shareholders. And then the second one, do the third one, and do the fourth one. You just keep, on and on and on. Nobody uses this model, but I think that's the only model that works. And because if you keep 50% of a 100,000 ounce mine, it's worth more than 5x your current value. So it works from a shareholder standpoint. It blows it up, but then you can grow on top of it. So it creates a foundation. You keep growing and growing and growing. Right. But it's a long-term strategy. So do you see yourselves possibly doing something like that, where you actually do a JV and keep a bunch of the cash?
Well, I mean, look, I could do it. I mean, I've done alluvial mining. We're mining like 0.3 grams per ton on the alluvial. We're making lots of money, right? So, I mean, I could contract this even with my locals in Ghana, and they'd love to do that. And, I could take a lot of the risk out of it and probably just take a royalty off of it with little production risk, okay? Having said that, if I wanted to put it in production, I don't think the Kibi mine is going to be less than sort of, when we're done, 200 to 250,000 ounces. So it's a pretty big capex. It's about 300 million for a mine. All options are open, but obviously you have three things you can do. Like you said, you could, you could sell the one asset to a major if you get a nice valuation, and dividend the cash out to shareholders and go at the next property. You could do a joint venture and put it in production. There's plenty of big mining companies locally that have approached me. These are African companies that are sort of in the mid-size area. They're like mines 1 to 2 million ounces. Okay. And then the third option, is do it yourself. And that's an option too. I've been approached by royalty companies. The capital's available through royalty companies. You could finance this yourself and put it in production. If we put it in production, I would have an aggressive dividend model like the oil patch in Canada, because ultimately I have to start returning my shareholders some capital. They've been shareholders for a long time, including myself, and we haven't taken any capital out. We've just invested in the equity. So there's three options are available. We're not, closed to either option. I think we're in a, bull market for gold, and we just want to make sure our shareholders, we monetize the asset in some fashion. So we're open to all three options.
Right. So basically plan A is to use your free cash flow to drill this out and get it to 2 million plus. And then after you accomplish that, then you can start on, plan B. Now what do we do, kind of thing, and then make a decision on path forward. So it's interesting. So what NSR's royalties are on the property?
Well, we don't have any NSR royalties on our property in Ghana, but you have to remember that in Africa, we're the biggest generator of tax revenue for the government. Like 40% of the foreign reserves are from like 8 miners. There's 8 miners. We're the smallest. So there's Newmont, Anglo Goldfields. I touched on 3 of the big majors, now Xinjiang. So we produce 40% of the USD dollars for the government that they get. There's that, there's oil, okay, and cocoa. So they charge a 5% royalty, right? So it's hard. I mean, there are NSRs, like I know some companies that have done them, but I've stayed away from them because of the royalty. We don't just have a tax rate, we have a royalty rate to the government on sales. And right now we're at 5% royalty. So you can see there, when I was talking to majors early on when they were interested in property, they said, Jim, don't ever put a royalty on this because it makes it a little more difficult when gold prices go lower. So I kind of kept away from royalties to finance this. And I don't plan on doing any royalties on the company, like, sorry, not royalties, but NSRs because of the government royalty.
Is Ghana demand a percentage of the ownership of the project or only the royalty? Do you want 100% or does Ghana own part?
Yeah, it's a good question. So Ghana in their mining code, whether you're Newmont, Anglo, or Xtra-Gold, they have right now the max royalty rate is 5 that we're paying, but Newmont has a deal at 3. And so does Anglo and Goldfields. But smaller mines, if you don't invest 5 million capex, you can't really negotiate the 3%. So we're stuck with a 5 unless we sell out to one of those, and then our royalty go to 3. Then the ownership, they get a free carried 10%, but the government doesn't monetize any value from that 10% unless you declare a dividend at the local level. So there isn't anything for them to capture. So a lot of times the government, when we have big profits in Ghana, they're going to the majors.
They're only in equity, then they only own equity 10%?
They own the equity 10% of the Ghana sub. So
Okay.
So all of us have public companies like Newmont Extra that own 90% of the equity of the Ghana sub, and then 10% is carried by the government. And if you sell the asset, that just transfers.
What's the corporate tax rate?
Corporate tax rate, the special deals that were done for the big majors were 25%, but right now my rate's 35% for mining. So the corporate tax rate with the royalty, it's a high tax rate, but the advantage of Ghana is we're shovel ready, a historic jurisdiction, safe, British colony. We don't have it's one of the safest countries in all of Africa. You don't have security risks. So we have a high tax rate. But having said that, because we start open pit, we have a low extraction rate. So these type of mines that we have right now, they're about 1,300, max 1,500 all in to pull an ounce out with the tax at 35% and the royalty at 5. Yeah.
All right. So yeah. So even though you have the high tax, since you have the lower cost, it kind of offsets it.
Right. Yeah. But I'm not going to say here and say we're a low tax gold jurisdiction, but because we have good labor costs, lots of labor, low extraction costs, we get it back in other ways.
Right. You have a lot of free cash flow. Why aren't you drilling some of these other properties yet?
Well, we're very disciplined, and the cash flow that we have sitting on the balance sheet is there because, obviously we've been through a lot of bear markets. So when I get to about 20 million US, I'll probably stop. Right. And then, like, for example, we're going to take a drill shot at a property to the north, 30 kilometers away. So we're stepping out on that now, but I don't mind having the 20 million US buffer cash. We'll finish the year at about 19, but we are starting to step out now to your questions because we've soil sampled, we've done surveys over the whole belt, we've trenched. Like, we're in a structure now 30 kilometers from the deposit, another one, a big granite anomaly. And, so, I mean, we're starting to do that now. But remember, we were constrained on cash flow for 7 years, right?
It's interesting. I'm a big critic of the larger mining companies ignoring their balance sheet.
Right.
I love the fact that you just said you're a small exploration company and you're watching your balance sheet like a hawk.
Yeah.
And most mining companies of your size would have, they would burn all that cash down to 3 million and then do a financing. Just about all of them would just burn it all down to 3, 2, and do a financing. And you're like, no, we're not going to burn it. We're going to be very judicious. We're going to maintain. We're going to be disciplined. It's unbelievable. That's you, right? And so these larger companies like Coeur and Hecla, Newmont, they have no interest in being judicious with their balance sheet. They're like, oh, we have a bunch of debt on our balance sheet. Like last quarter, Newmont only paid down 300 million in debt. They could have paid down a lot more if they wanted to. And then they're spending capex like crazy. They don't have to. They could be more judicious. They could focus on spending that up. But they pretend that debt is beneficial. It's okay. We're using debt. It's leveraging, giving us leverage. So it's BS, right? I want these companies to pay off their debt as fast as they can, just like a homeowner who basically, he's got too much debt on his credit card. Pay
Right.
that credit card. Don't go to dinner every night. Pay off the credit card. You
Well,
know,
I agree with you. We're in a high risk business, gold explorers, right? And I've been approached by several people to do other deals and in other countries. And I say one of the problems with every time we get cash, most of my peers, they buy another asset, right? And the problem is that, like I just said, our asset's 55,000 acres or 90 square kilometers. If I find the first gold shoot, we've only drilled 1% of our property. I've got enough cash here my grandchildren could drill. Okay. It's like, if we find the first one, we have enough property, our grandchildren could drill there. So, I mean, there's so much land there. There's no reason for me to go outside what I know and start, for example, acquiring assets in Canada with my leftover cash and spreading my resources because I believe the Kibi Gold Belt's going to unleash a lot of gold for shareholders. So I'm trying to stay focused. We are stepping out. We're pushing the accelerator. You're going to see some more news coming out. We own 3 rigs. We're not adverse to putting more rigs out. We bought all our rigs. Each rig costs us about $1 million to pay back's about 3 months, right? If we contract drill, it's not more than 4 months, right? So, we're coming along. We own all our equipment, and we've, in 20 years, 25 years, I've seen a lot of ups and downs. So, we want to be disciplined. I don't buy major mining stocks like for the reasons you said. I think, I put all my money and my family money into this thing. We're up to 6 million shares. Like I have to return to me and my shareholders and friends and family. So we're very disciplined because we put our own money in. As you know, most of these majors, they don't have a big enough equity stake. I think that's why they gamble a little bit more and maybe, don't always do the right thing.
so this property, did you say that you got it in 2003? Have you done a reverse split? Because you only have 49 million fully diluted shares.
No, when we came out public, we came out at like 40 million. If you can go with the prospectus, we issued like, I don't know, like we issued like 8 million shares at $1.35. What we did different, where the confusion is that, so we had about 52 million shares out, but we've quietly, so we took 10% of our alluvial cash flow that we had that we were building up at that 18 million, and we bought back shares. So we've canceled about 5.5 million shares since we've had the issuer bid since 2014. It's not significant, but it's our average cost on that's been about probably 60 cents US. So it's been accretive. So we're on the issuer bid.
Sorry to cut you off, James. This is fascinating. So first of all, most exploration companies, 9 out of 10 easy. There's no way in heck that they basically have 49 million fully diluted shares and never did a reverse split over 20 years. There's no way, right? But the thing is beautiful about this is that it correlates to what you said earlier about maintaining a good balance sheet, right?
Right.
So basically, you're basically watching your balance sheet and watching your share structure. This is super rare in the mining business. Most companies don't do it that even have the ability to do it. Some don't, but even the ones that do it have the ability don't. So this is. I mean, you can pat yourself on the back. This is very impressive. I mean, I've been doing this for 20 years. Pretty rare for me to see a company have this type of execution. It's very impressive.
Yeah, I mean, well, thanks for that. I mean, we think we've done a great job in a bad market. This thing could have easily gone under. Like I saw 900. So just to give you an idea, in Ghana, there was 200 people doing what I was doing in 210. 2 survived, me and one other company.
Wow.
Cardinal sold in 2021. It was 5 million ounce deposit. They sold to Shandong. It's a producing mine. So that was a friend of mine. So out of 200 people in Ghana exploring, we've got left with 2 by 2015. So I mean, I watched all my peers go under. So I mean, the only way to survive is to be disciplined in this market, right? Because you can have these long bear markets. Now, I'm being offered money all the time from investment houses, but I don't need the money. So why would I dilute the company? What I will do at the right time when I get to 2 million, I might let a major come in and buy like 9.9% to get my liquidity going a bit, because one of the negatives about us is we don't trade a lot. because we haven't issued any paper, right, over the years, like most of my peers. So if there is a knock, it's the liquidity. But I think with this gold market, we'll be able to work through that.
That's a benefit. What do you?
I'm just saying what some of the traders say. These are the short-term guys, right?
That's actually the tighter the float, the better.
I mean, I'm just saying what some of the traders say. One of the negatives is I'm trying to, give the
Well,
reader.
there is truth to the fact that some funds won't buy it because there's no liquidity. When in actuality, there's plenty of liquidity. You just don't want to pay for it, right? There's always somebody going to sell at a certain price.
Yeah, I mean, if someone wants to sell 100,000, we'll buy it on the issuer bid, right? For example, because we think our stock's worth about double what it's trading at, or like. So we did a little thing where at $2,800 gold, we should be worth $150 an ounce in the ground, right? So our NAV's about 369 right now, and that's only valuing it at 125 an ounce in the ground. We're trading at, on the resource, we proved that we're trading at like $40 in the ground, which is higher than our peers in Canada. But like I said, if you go to sell that, you're getting about 150. So you're getting a higher valuation. So the resource we should be trading. But so we as the resource grows and we get closer to 2 million, that gap needs to close. So the stock needs to go up, right? But if you don't need to raise money, you don't need to panic, right? So, but so if gold stays here and we're in very good shape as the resource grows, we're going to show that this thing's way undervalued.
My suggestion would not be to do a 9.9 or a 15 or a 19.9. Do 5. Like just get your feet wet with someone, because you from doing it yourself for this many years, you've proven that you can do it, right? Like, and these guys are envious of what you're doing. I mean, I work with Don every week. He rarely says this many nice things in one interview about someone's discipline, right? It's very true. And so I would hold tight to that shares that you have. If your family owns 6 million shares out of 49 million total, you're in the driver's seat here.
Yeah, so we're 46 right now. So just because we bought, I think we bought like I told you, 5 million of the issuer bid. So we actually just went below 46 on the last.
Okay.
Quarterly. Yeah, but you're pretty close. Yeah.
Could you talk about the rest of the shares that you know of
Sure.
in terms of
Yeah,
where they
so
are?
Mark McGinnis, the co-founder, owns 6 million. Our deal was so there's 12, and then one of my Swiss friends who's been with us since 2007, he's got 6 million shares, so that's 18. So three of us own 18, and then
Okay.
another at least 10 on Mark's books. So you probably get up to about
That's 28 million.
yeah, like we just voted. The vote will come out. We just had 28 million vote without calling anyone. Like our AGM's coming up on. I just got their sheet, so we didn't make one call, and we got 55% of the vote. So that's about right. We got about 28 million, between Mark's book and like basically three of us. Yeah.
Okay.
Yeah.
Yet another reason not to give out 9.9 if you can help it.
Well, at the end of the day, I mean, like I'm just saying, I hear what you're saying. I'm just saying most of the deals they're doing right now are buying 9.9. I agree. If you're in a hot market and you don't need to, your shareholders are going to give you a little more time, then you don't have to create that liquidity. The good thing, so they'll do, like you said, if it's a good gold market, they'll do anywhere from 5 to 9.9. You could negotiate 5 if you're in the, if you show it's 2 million going to 4, it's that they're not going to be fast, right? To get their foot in the door.
Yep.
Because
Yep.
look, at the end of the day, you just have to go to 3 shareholders and convince them it's a good deal, right? If it's accretive for shareholders.
Right.
But, I mean, I think we're going to go in a super bull market here for gold. And, so I mean, I don't think there is a rush, but at the same time, you want to monetize and get some cash for shareholders on this run.
So you mentioned the last resource was October of 22. Would that be something you aim to update by next year?
24. So there's about, so it came out in October of 2024. Sorry if I said 22.
I think you said 22. Okay. That's good to know. So that's pretty updated.
Sorry, my mistake. 2024. So that's pretty, it's 6 months, 9 months old. And that closed all the drilling off on that. It's just over 1.2 million ounces. That's from surface down to about, on average, about 200 meters vertical. So that's all mainly open pittable. And then we've stepped out into the zone adjacent to it, and we're hoping we can add another 300,000 to 500,000 ounces. So we've identified on the one property about 10 gold anomalies at surface. So we're on the third one of 10 that we've identified at surface, but we haven't even tackled the underground. So there's lots of drilling to do. We hope this one will generate, 500,000. And if it can generate 500,000, we can see, are we getting close to that 2 million? Yeah.
Okay.
And we are going to, like Don said, we are going to expedite some other targets. And we've got some priority targets we want to take some shots on some other properties. And right in the center of the Kibi, I'll just add this: we've hit some high, we've hit some high grade. There's a potential for high grade veining too, which we haven't really tackled. But we got some like 400 grams per ton over half a meter, but it pinched out. So somewhere on that property, I do believe there's a high grade system, but we haven't tackled that yet. But we've hit a few sniffs of it, So there's a real high grade potential within the center middle of the property where the fault is, the main fault. And just the British mined some veins there in 1880 to 1920, and they, on their historical reports, they were mining VG up to 31 grams per ton. So it was all VG they were mining. So there is a history of someone mining that, but not the open pit, the vein system. Yeah.
I want to interject here. So I like to value companies. So looking at your company, this is the way I look at it. I think that you're at 1.2, but I think this thing's going to grow to 3 million ounces. Just based on, if it does, it get to 3 million, and if it only gets to 2, at $175 an ounce, if you sell it for 175, that's 525 valuation. If you don't dilute shares, and you don't really need to dilute.
Yeah.
But if you just drill for 2 more years, maybe 3 more years, you get it to 3 million. That's a 6-bagger. But then you still have all your other properties. So you sell this one for 525, and then you take all that cash, roll it over, and just drill your other properties. So you get a 6-bagger plus the future. I think that's a possibility. But even if you don't get to 3 million, if you only get to 2.5, you still get a 4-bagger. So I look at this as a 4 to 6-bagger plus the future. That's the way I value your company. Do you think I'm off base?
I think that's bang on. I think if the gold price goes higher, the valuation goes up, right? So I mean, if gold moves higher, then if it's higher in 2 to 3 years, the valuations go up from there, right? And I think your valuation's bang on. The only thing I would say is there's always a chance to hit that high grade system. We're going to take some drill, like we're doing some magnetic work right now, some reinterpretation of our mag work called 3D inversion. And I'm not a geophysicist, but we've identified some good geophysical targets. If we ever hit the high grade system that made this, then things change quick, right? You can all of a sudden to be in something. There's some high grade stuff. So if you hit one of those, then those valuations change. You could end up with $1 billion market.
How many meters a year are you currently drilling?
So with the 3 rigs, we're doing 20,000 meters. Yeah. And that's so that's what we're averaging right now. But I said there's an option.
And how deep are you drilling?
An average hole is like not too far off what you said. It's about an average exploration hole is 150 meters.
Okay.
Meters, yeah. Yeah. If you want feet, I can do it in feet too. So
of that 20,000, how much is expansionary and how much is infill?
Well, all that 20,000, so that 20,000 closed out last year's infill and expansion. So let's say it was half expansion and half infill, about 10,000 of each last year. Yeah. So this year will be all, right now we're doing all grassroots on zone 4, but if that turns into a zone, then all of a sudden we'll be infilling it, right? So we have 30 holes that we're about to release, just under 30 holes, and that's of a new zone that's a brand new zone, pure exploration drilling. We've got 30 holes into it, and if the grades are economic, then it will become an infill project. And we probably have to put 100 holes in to get the resource up on it.
How many deposits are you drilling right now?
That's the one we're drilling, and 2 rigs are drilling something that we think is going to be another add-on to the deposit, and then the 3rd rig is down drilling that high-grade structure I told you about.
So it sounds like you're kind of being very patient, very methodical. You're not going uber all over the place, aggressive drilling, and that kind of coincides with your balance sheet. Not spending all of it.
Yeah, so we're banking an extra. So this year, if the gold price stays where I'm projecting, we bank an extra 3 million cash. We're going to go from 15 to about 18 million. So we're getting close to that 20, right? So, and our VP of X is a very good geologist, and he's been with us since 2006 and has done all the work. So when we drill something, we've done extensive trenching, geophysical, structural work. We use a company called Tech to do our structural work out of South Africa that does all the big mines in Africa for Barrick and Gold Fields, and they do our work. So we deal with some of the same firms that majors deal with on doing these extensions of mines. So we have a great team. It's a small team and nimble, but it's a great team. But we're pretty big with our alluvial guys. We employ over 500 people on between employment and contract, right? So it's not a super small company.
One final question. The Ghana government historically has been very mining friendly, but lately they've kind of made a little bit of noise. So can you make some comments about what's changed with the Ghana government and their mining laws?
Yeah, so I've been there 20 years and gone through maybe one, two, three, at least 5 presidents now. And at the start of a new president, there's always noise about extracting more from the mining sector. But you got to work through what's noise and what's real, right? So I was there and met with the new minister of mines, and there's a push to hire more local content, things like that, like more, have less expats and for us to train them, which I'm fine with. But I haven't. They're planning on some changes, and I met with the minister and I went over the changes. If the changes go through, in my opinion, if they're as he told me verbally, which was in the paper too recently in Reuters, they're not material. The main 3 are they don't want to do any more special tax deals. So for Newmont, Goldfields, they did that 25%, 3% royalty. When those contracts run out, they want to go to the 5% and the 35% tax rate. That's number one. Number two, so those are called stability agreements. They want to nix those special tax deals, but they're going to run to the end of their life. So most of those deals are 15-year deals. So they're not going to cancel them, which is good because Ghana's always respected the rule of law. So that's one. The Ghana government hasn't distributed the royalties and the taxes to the communities in which the mines happen. They're supposed to send 40% by law. They say they're going to fix that. That's an internal thing. And they say they're going to reduce the mining lease from 30 years to 20. But there's automatic renewals if you abide by the lease. So those were the 3 main changes. There was a couple other things on local content, like I mentioned, but they didn't talk about any more taxes or percentages. So if they do that, to me, it's not material. It doesn't even affect me really. So in the majors, it would only have an effect on them when the old contracts terminate. But they've got all that back anyway. So I don't view it as a major deal. But I'm going to say, but I'm cautiously optimistic. But this is just talk right now. There's no draft legislation formalized. So I would have to read the final draft legislation.
But everything you said is just a nothing burger. I mean, as far as debt being detrimental to your company, it's all a nothing burger. It sounds to me like Ghana is probably one of the best places to mine in West Africa. Would you agree?
Political safeness and that it's number one. We're the biggest now. We're the size of the state of Oregon, and we produce 5 million ounces a year between us and the small scale miners. That's about 15 billion of revenue. So we permit mines. We have a fairly high tax base, but it's business friendly. Like I said, Ghanaians are very nice people. It's British common law. If someone tries to disrupt your lease, you have a right to go to international arbitration, which is very good. And so far, my 20 years, and then my friend that was there 10 years, they've never violated those terms. So, they've had a few disagreements with a few companies that maybe haven't performed, but so far I've had a good relationship with the government, and I think it's one of the best places to work in Africa. And I've traveled to a bunch.
We appreciate the update. Last question to piggyback on what you just were talking about. If those changes were to go into legislation, do you think that's happening this year, next year?
So the minister is drafting the legislation. So he has a technical team and he's not finished. He just said in Reuters yesterday, they're 85% done. So that means they're not finished, right? And they'll draft the legislation, then they have to send it to the technical committee parliament. So that's probably, if they do everything fast, it's 3 months to do that from now. And then to get through parliament, it's probably not a this year thing, it's a next year thing.
Yeah.
Unless they really rush it through, because parliament, they have to vote on the bill. There's 279 parliamentary members. But they won't get anything passed that makes sense because the current party won the majority. So they need 51% of the vote to pass in parliament, but it will have to go to vote. But we haven't had any changes. So this Mining Act's been in force since 2006, and there's been subsidiary legislation involved. And like I said, the stuff I read, I didn't view it as verbally what he told me as anything threatening, and Reuters reported the same. So as long as they don't do any curveball here, it's business as usual. Yeah,
that's great. I'm sure you and your partners are happy about that.
Well, look, at the end of the day, we're not going to dictate mining law in Ghana, but it is a British colony. A lot of the young Ghanaians have schooled in London and New York and Toronto and gone back, and it's a good place to work. And sometimes the government can mess up and pass laws that aren't very good for investment in Ghana. But this president understands mining. He was there. He ran the country from 2012 to 2016. So he has been there. He understands mining. His brother is one of the biggest African miners. His name is Ibrahim Mahama. So, I mean, I would be shocked if they went offside and did, because they understand mining. So I'm cautiously optimistic, but it's, I'll wait for the final legislation to make my determination in writing. But I from what I was told, it all looks good. So
good. That's great. Well, thank you for coming on. Really interesting story here. What attracted me first off was, we've seen a lot of negative press on Mali this year with regards to Barrick, BTG. You and I have talked about this before, but Ghana seems to be a different type of jurisdiction. As we just discussed with James, I don't really see this as being a near-term problem, even if things were to be curveballed. It's more of like a Q1, Q2 next year situation. And, he mentioned twice that he's going to end the year at $18 to $19 million cash in the bank. But the thing that really got my attention initially was the share structure. It's him, a Swiss entity, and a partner owning 18 million of the 46 million shares, and then a broker has another 10 million shares. That's 28 million shares of the 46 million accounted for, and you and I always are looking for 30%. That's well over 50%, right? So it's kind of interesting.
Yeah, definitely an interesting drill story. Love the fact that they're controlling their share totals and managing their balance sheets is very impressive. Plus the fact that a lot of drill targets, this thing's going to grow in size. It's undervalued. I think I'm not doing a lot of drill stories like this anymore at this point in time. Being very selective, but in the past, this is probably a bit of stock I would buy because it looks like it could easily be a 3+ bagger based on it being undervalued, and they're going to find more gold and they're not going to dilute us, and they have more properties. So as just a pure drill story, it makes a lot of sense. They've done a really good job. It's pretty evident, and I have their insiders at 60%, family and friends at 50%. I think, and so that's very impressive. I don't think they're going to be giving this company away. They've held it for a long time. I think they recognize that it's undervalued and they're going to find more gold. So they're going to hang on to it. I don't think they would take any price right now, except for maybe a 50-50 JV where they're free carried. That's something you can't turn down. Yeah, I mean, it's a good story. I mean, we learned a lot about Ghana. I think that was very positive.
Yeah.
I didn't realize that Ghana was as mining friendly as he explained. That was very impressive. I mean, I think Asante is in Ghana. So that's on my buy list. So I'm now more apt to buy Asante after hearing this story. Asante is a very undervalued company because of West Africa. So they're not getting any value for being in Ghana. So that to me is very, very intriguing. I think Galiano as well. I'm looking at Galiano right now. Yeah, Galiano is in Ghana, so that makes Galiano looks very juicy as well because Galiano is cheap. So Galiano and Asante, those two, I own Galiano, but I think I got to jump on Asante now because after hearing what he said, I like Ghana a lot better.
Yeah.
Sounds like a pretty darn good place to mine. These companies are not getting value. I think they will. I mean, they're trading at very, very low multiples.
Mm-hmm.
So
I wanted to point out something that you and I are aware of, but many of our listeners are not. So one of the things that I picked up on was that when they did this deal in 2010, they did it at $1.35 a share. From then until 2015, James said over those 5 years, he was one of 200 mining entities, if you will, not necessarily mining companies, and 2 of them survived. That's 1%. I mean, let's even round up to 5%. All right, if the numbers are somewhat off, it's a tough business. And what is interesting about his story, as well as Triumph Gold, which I've highlighted for investors since around 13 cents, is that John Anderson did the same thing over the last couple of years. He just idled the company and didn't spend the money, and he kept the share structure intact. He owns 8% of the company. Mike Gentile owns 8% of the company. Eric Sprott is meeting with Triumph this week to talk about a position there. Like when you wrap up the share structure with really good investors that are longer term, as this company did, Xtra-Gold, Triumph is going to do that. A handful of others will do that, but most of them don't do that, right? Like it's like most of them are going to, timing really matters. Like, if you did stuff earlier in the 2010s and 2020s, you might not even be around. You're watching this video and wishing that you had just chilled out a bit on the spend. And we're focused more on methodical behavior and managing balance sheets. And these guys have done a good job of that. So I think it's kind of an interesting story.
Yeah. The one thing I'm excited about here is not Extract so much, but I think Extract is an interesting story. But there's 3 development plays in Ghana. The third one is Nucor. So, Galiano is a producer. I take it back. So we got 2 producers in development. So we got Galiano as a producer, highly, highly undervalued. Then we got Nucor as a development play.
Right.
And what's the third one I just mentioned? Asante, which is a combination developer producer. They're a producer, but they're growing production. So we have 3 really nice 10-baggers, whereas I don't see Extract as a 10-bagger per se. I mean, it could be, but I'm looking at Extract more as kind of a 3, 4, 5-bagger. I mean, he talked about the high grade, but it's a pure exploration play. I don't see them, pivoting to kind of a JV style. But man, I mean, I really like those other three plays a lot better now after hearing him talk about Ghana. I didn't realize Ghana was such a great, British colony. I didn't know that. I didn't realize Ghana. I knew historically Ghana had been mining friendly, but I had heard that a high tax rate. But the high tax rate, it gets offset because your labor costs are lower, so
That's right.
it balances out.
And they own their own drill rigs, right? They own 3 drill rigs. That's huge because if another COVID happens, they're not worried about how do I get a rig? Like they already have their rigs. I mean, that's one of the things I learned about COVID was so many people were like, oh my gosh, I can't find equipment. I can't find people who operate the equipment. Like it's a nice little setup. It really is. I like the story a lot. I mean, you and I see the world a little bit differently because you're looking for the huge multiple gains, and I'm looking for something steady. When you look at that chart of XTGRF, I mean, it's just like this. It's like just coasting higher. There's hardly any. Yeah.
Yeah, exactly. If you're looking for steady gains, this is a good play. But I'm looking for the big alpha. I've been ignoring Nucor because I thought Nucor was an exploration play, but they're pivoting to development, and so. Now I don't think I can ignore Nucor anymore. It looks really, really juicy now. So I'll take a close look at that one.
Thanks for the insight, Don. Let's leave it here, and then you and I will be back next week to meet with a few other companies and talk more macro.
Sounds good. All right, John.
All right, thanks for joining us, Don, and thanks everyone for listening. We appreciate it.